Welcome back to the channel, Crypto Trend Trader with the morning market update. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. We will be doing our typical technical analysis. Today I'm going to be getting started with Bitcoin, and then we can kind of go from there. So we obviously have quite a bit of volatility in the markets. Everything's been playing out as we expected. First off, we are going to take a look at Bitcoin's daily chart. I'm looking at Coinbase right now. We obviously have quite a bit of action going on coming into this Friday close. We're looking at the end of the month as well. So we have, a lot of stuff to pay attention to. Options are expiring end of the month, end of the week, going into the weekend. I would expect quite a bit of volatility. We have potentially put in we put in a temporary top at this point in time. We had a high, broke down from it, took out the previous low of that candle right there, and then immediately got that violent sell-off, broke below the 8, immediately found support on the 21, and then closed back above the 8, at which point in time we put in another massive bearish candle below the 21, found support, could not get back above the 8, and now here we have closed below the 21 and opened below the 21. So what we're paying attention to now is, can we save this price action and move back up here? Or is this going to get continuation to the downside? At this point in time, it obviously looks bearish. The previous time when this happened, we found support, got back up above the 8 moving average, and then slowly lost strength before we sold off down to the 55. Right now, this looks much weaker. We immediately broke down, could not get back above the 8, even on a single close, and then broke down. So our next target to the downside is going to be the 50 and 55, which line up coincidentally exactly at the top of the previous little market high right there. So we're looking at that 40,000 range very closely. 40,500 is like a key level for a potential touchdown here to essentially turn this resistance into support when we come back down to test it. As you can see, we got the hard sell on the Jewel Thief. Previously, when we got the hard sell on the Jewel Thief, it resulted in an over 30% move to the downside. You'll see as well, we have multiple histograms in red, broke down below the moving average and lost the slope. Here we had multiple histograms in a row, broke down below the moving average and lost the slope. So here we have flipped it over red. Typically after you flip it over red, you will get multiple histograms in a row. We'll typically see a strong, nice stab down, and then potentially look for a bottom on a key support level or moving average, which again would line up perfectly with that 40,000 plus range. Somewhere in between 40 and 41,000. Does that have to be the absolute bottom and then we continue up from there? No, not whatsoever. You'll notice here we got the cross of the 8 and 21, but we were able to save it, cross it back to the upside, and then we got that bullish continuation. So here, that's exactly what we've been paying attention to, is are we going to get the 8 and 21 cross, and then what happens from there. If we do get the 8 and 21 cross on the daily, that is when I will go flat in the market, or potentially start going short, as you're looking for the trend to top out. I like to make positions based off of all these different things in the market that I've discussed on either the 4-hour or daily time frame specifically, just because I find those to be the most useful for long trending trades. You'll notice that in general, like for instance, the last time we had that situation happen, here we had the breakdown in the beginning of September last year, and then here we actually were able to cross back above on the 8 and 21 in the middle of October. From that middle of October point right there, we had essentially this entire price action to the upside. We saved price action right here, and then here we cross back down to the downside. So without taking any liberty on when you sold or anything, that was a 217% profit, and that's 106 days. So obviously that is a nice long trending trade. Here we got a similar move where we consolidated below it, but then broke back above it again. The same exact thing that happened here. We broke down below it, consolidated sideways, and then we're able to save the trend and continue on. So here you had a few days, out of the market or flat, followed by essentially a situation where we're able to cross it back to the upside. At which point in time, if you just go to today's price action right now, that's another 40%. If this breaks down now and crosses, it'll probably cross down to the downside somewhere around this area. So still, if you waited to take profits, even at that previous support or somewhere in there, you're looking at like 20 to 40% in profits. So you can see that this is not the most active for day trading. It's more of a longer term trending trade move. But also you'll see that, this is extremely functional as well on shorter time frames. So if we go down to, basically start looking at something a little shorter like the 4-hour here, we can take a look at the Bitcoin chart on the 4-hour. And you'll see that essentially same strategy. If you go by the parabolic SAR up here, when we took that out, it had you out of the markets at 56,000. If you went by the 821 cross to the downside, it had you out of the markets at 54,000. And then, we tempted to save it again, failed, broke back down, and now here we are sitting at the 200 exponential moving average. Now, this is something that I'm closely paying attention to because this, to me, is bullish divergence. We have a low followed by a lower low, and then on our indicator oscillators, we have a low right here followed by a higher low. So, this is essentially looking like it's going to be bullish divergence playing out. Now, what does that mean? Does it mean we're going to come back up here, and retest these levels and fail? Definitely a possibility. Does it mean we're going to come all the way back up to the height of this trend and try to turn it back around bullish? Also, again, a possibility, but you have to sort of play it by ear. Again, you'll see here where the blue turned around. If this blue starts to turn around now and gets continuation back to the upside, that would be essentially our bullish divergence playing out. But, once you're looking at a 4-hour trend and this has switched over 8 below the 21, I start looking to this as the 4-hour is a bearish trend or a downtrend. The daily is still technically an uptrend or bull trend, but it has met 2 of my 3 requirements, for essentially like a reversal potentially or time in the market when I want to be flat. So, this is not the time to be getting overly bullish, overly leveraged, etc. If you do take trades right now, in my opinion, or if I take trades right now, they're going to be more like scalp or temporary trades for like a quick flip or a quick profit. So I'm not looking to, quote unquote, invest in these markets right now. At different levels, after certain retracements, I'll potentially be looking to, get back into those trades for like longer trending trades. And take those entries as well. But again, I'm looking for moving average crosses as they are, like, in my opinion, most consistent and reliable way to trade these markets. So give me just one moment and we can switch over. All right, so now here, let's take a look at some of our traditional markets. We can start off here with, one of my personal favorites. We'll take a look at the 10-year Treasury Yield. As you can see, we've been talking about this for quite some time. Now, obviously, everyone is talking about it. We've been in this bearish downtrend for quite some time. Basically started consolidating and put in our temporary bottom here. So we drew our Fibonacci from the top of that peak back here to our bottom right here. So that's going back all the way to, what's that, like October last year? No, I'm sorry, October of 2019. So we've been basically going down. Yields have been going down, bottomed out down here at like 0.4%. And you'll notice that from that point, we essentially still came back down, but attempted to put in another low, failed to put in a lower low, and again, started to develop what looked like a bottoming pattern, at which point in time we were expecting to come back up, and test key Fibonacci levels. On the initial bounce back up, we got back to the 382, came back down, put in a higher low, and then came up to the 382 again, consolidated, at which point in time we moved up to the 0.5. Once we were back on top of the 200 exponential and 200 simple moving average, at this point in time right here, we got bullish on these, like just less than 1% yields. And then obviously as the slope flipped over and now is a positive slope to the upside, that is a reversal in the trend based on the 200 moving averages. So we consolidated there above the 382, moved up to the 0.5, had a slight sell-off, but the most important thing is here, we started to develop this channel that we've been operating inside since then, the red on top, the white on bottom, and we have oscillated from the top to the bottom, to the top, to the bottom, to the top, to the bottom, and then to the top here, started consolidating. We told you here that if we consolidated long enough at the 0.5, we expected to break through it. That's our 377 and 528 moving averages acted as resistance. We broke through them, and then we consolidated at the top of the channel, at which point in time it became evident that it looked like we were going to be breaking out of the channel. As typically when you start to consolidate quite a bit at a support or resistance, you have an extremely high likelihood of breaking it. And we were starting to see quite a bit of weakness in some of our traditional markets, obviously, as well as crypto, and looking like they were potentially topping out. And we talked about the significance of 1.5 as that level where essentially that is the S&P's yield essentially from dividends is roughly 1.5%. So at if you can get into essentially like treasuries and get the same yield on a 10-year treasury as you can on the S&P, it's much less risky because you're essentially betting on the government rather than betting on companies inside of an index. So you'll see here we put into play our measured move of the channel, which obviously the second we broke out of this channel, we gapped up, immediately got the measured move up to the top of the channel, and then actually slightly exceeded it. We topped out that measure move at 1.61%, and then we closed at 1.52%, which at this point in time, all we're showing is strength. We've closed on top of the 618. I would expect us to come back down and retest the top of the channel, potentially break down below the 618, potentially retest, some of these moving averages. But at this point in time, our next target is going to be that 786 up here, which is 2%. 2% is basically like absolutely detrimental to the financial markets. You could argue that already. This is detrimental. This is February 2020 was the last time we were at this level. So essentially through the entire situation, the entire, cerveza sickness, we have been, lower rates than this and parabolically lower at most points in time. So, here now we have broken above it. So all of a sudden money is expensive again. It's not cheap. It's not free. So, you could see a potential shift in how assets are allocated or how capital is allocated in these various speculative assets. So, do you necessarily need to see violent sell-offs? Not necessarily. But at the same time, are we going to see the continued bubble momentum that we've seen previously? Probably not. And if you pay attention to how capital has been allocated lately, the majority of the indexes are being propped up by, sector or a few specific stocks, which is typically what happens at the end of a bubble or a bubble pop scenario. All the money starts to consolidate. The same as musical chairs. At the beginning, you have 100 chairs and, 101 people. And then by the end, you have only, 20 chairs left and 21 people, and it gets slower and slower and slower. All the energy of all those people that were playing consolidates into fewer people and fewer chairs, fewer people, fewer chairs. And then finally at the end, there's a couple that survive and, the game ends. So that's what we're paying attention to. If we get that break up to our 786 level, that 786 level, we have not been at those levels since August of 2019. So that would be, that's essentially like a massive event right there. So we're paying attention to that, and if it happens, when it happens, etc. We can look at let's actually skip around here for a second, and let's go over to our DXY, just because they correspond the most here. So, same situation basically with the DXY. We had topped out previously back here. This is the dollar index in relation to other currencies. It's a basket of currencies, but primarily weighted to the euro. So here we have the March 2020 high right there, at which point in time the dollar has been weakening substantially in relation to all these other currencies. People were getting extremely bearish around some of these various levels, essentially saying that the dollar is going to die, it's going to zero. But you have to understand that the dollar is the world reserve currency. So although it is designed to weaken over time, we are in a downtrend channel like this. Basically the same thing, oscillating inside the channel, came back down. This time when we came from the top to the bottom right here, we didn't make it all the way to the bottom. We made it to the middle of the channel, which point in time, we found strength at the middle, broke out, retested, and now here we found support once again at the breakout point of the channel, and we're looking to potentially complete our measured move. The measured move would take us all the way back up to like 95.5. We are currently at 90.5, but we are showing strength. So I'm paying attention to this. You know, the most important thing I spoke about back here was we could continue to, you know, just put in lower or higher lows and higher highs. You know, we could essentially turn this back around, not necessarily the macro, but to get our measure move here. So here we put in a low, and then we put in a high, and then we put in a higher low, and then we put in a higher high. But then people are getting skeptical right here. But the most important thing you need to pay attention to is this is essentially one move. So you have a low, then you have a high, then you come back down here. This is potentially a higher low than that point right there. So now what we want to see is to come and take out that 91.5 range, at which point in time we'll have a low, a high, a higher low, and then a higher high. Continue on to the upside. Our next retest, we expected to find resistance here and come back and retest the channel. You know, we would expect to come back up to it again, consolidate at it, and then break up to our 200, which is going to put us around that 93 level. So we are paying close attention to that. And then obviously, like inversely correlated to the dollar strengthening and the yields strengthening is our indexes, you know, and this is the S&P, which obviously, like we said, the 1.5 dividend is a key level. So, you know, people will de-risk from the index if they're going to get the same amount of money betting on the government not failing versus, you know, private sector or public sector rather not failing, which is essentially what the index is. You know, it's 500 publicly traded companies, you know, weighted based on, you know, different factors inside of it. So, you know, this is betting on companies as where the 10-year treasury is betting on an entire government. So that's what we're paying attention to. Obviously, you know, we were talking about this was potentially our top back here. You know, we sold off, got a nice rally back into it, but formed a lower high, and then we just got this massive bearish candle. You know, I would expect some strength going into the weekend and an attempt to save this, but, you know, the fact that we just had that Fed meeting, you know, and then this move happened right afterwards, the Fed is probably going to have to hold like an emergency meeting and try to respond to this. If we see, you know, Treasury start to get out of control right here. You know, we were looking at various divergences taking place right here. You know, obviously last time we got the hard sell, we were talking about what kind of sell-off we got down to the 50-55. Here we got the hard sell. Same thing. We were unable to flip the slope back blue even though we got above it. So, you know, this is potentially looking like we're going to be coming down here to this 89 very soon, which would be putting in a solid base off that previous low right there at like 369. But if we break down from that, you know, we're looking at like the 200 moving averages, which is like 350 range. So, you know, obviously still a little early to tell, but, you know, we saw this coming a mile away, already down 3%, looking at a move of 6%, and then down to the 200s would be about a 12% on this index. So definitely paying attention to that, and we will see how that plays out in time here. But again, we don't want to get too, you know, too ahead of ourselves on this. Let's take a look at TLRY next. I know quite a few people are into like the cannabis stocks here. TLRY to me is the strongest of the cannabis stocks. So let's take a look at that one. If you notice here, actually I'm going to show you on a little longer of a time frame. I'm going to flip over to the weekly time frame here, and what I'm paying attention to on TLRY is, you know, obviously back here we got the weekly 821 cross to the downside. That was all the way back at $83, and that was in February of 2019, which is when I lost interest in you know, cannabis stocks altogether. You see that we stayed below the 8 and 21, and then we finally got the cross back to the upside right here on the weekly in November of last year. That's when I got very interested in them once again. Which point in time we consolidated at that like $8 level and then shot up massively to the $70 level. You know, that was obviously based on like Wall Street bets and all that junk going on there. But still, we're at like $25 right now. So, you know, we already had like a 400% move, you know, from there. So, but this is just the beginning. As you can see, this trend lasted for years to the cross back to the upside. So I would expect, you know, if this potentially is entering a commodity bull market and, you know, with the various fundamentals in place, that this once again could last for years. What I'm thinking has happened at this point in time is we have got from our zero bottom down here at $2.41 to our one top right here at $12.48. We sold off 61.8% of the way. So that's a fib from the bottom to the top, a retracement of 61.8% of the move. Followed by another move to the upside. So that's the beginning of our two wave, which point in time the 2 to the 3 up here was that top at 67.50. what I would expect from there is a sell-off back down to the 618 again, which is going to correspond with the Elliott wave, which is where your 4 will come down to the top of the 1 and find support. We cannot retrace inside of this area on a longer time frame by more than a wick in these highly leveraged markets. So I would not expect this to come down on a weekly candle close below $10.32. But you'll see that could still be, from where we're at right now, over a 50% sell-off. Which is not unrealistic to think of. I would expect at least a retracement to this 0.5, potentially back down, to that 618. So anywhere in between like $17 and $12.50 is where I'm going to start getting extremely bullish. I will start leveraging my longs back into, laddering my longs back into positions around that area. And then if we actually, this is where it gets real crazy. The way that I calculated the move up here is, if we take the Fibonacci extension targets, I think I took it off on this one, but if we take our Fibonacci extension from the top of the 1 to the bottom of the 2, you'll see we came up here exactly to the 2.618, which is a 262% move, basically extension from that previous move right here. So you'll see that took us back up to our exact high right there, which is, obviously a perfect touch of it exactly to the top. So if we did the same move, assuming that we bottom out back here at 1275, let's say, and we take our fib extension from the top of the 3 to the bottom of that 4, that is going to give us our targets here in purple, which, I'm going to turn this off and just go out here because you have to zoom way out for this. That Fibonacci extension for the wave 5 would take us potentially back up to $1,037, which would be obviously an all-time high for this stock right here. I'm not saying it's going to happen by the specific date in time. It could take years for this to happen, but that is based on previous price action, a 61% retrace followed by a 2.618 extension, a 61% retrace followed by a 2.618 extension. That would give us that $1,000 target, which obviously at $25 looks ridiculous. But if you take into account that our previous all-time high was $295, it's basically just like a 3 or 4x from the previous all-time high. So if this thing is going to be in a long-term overall bull market, you would expect it to take out its all-time high and then, potentially move higher than its previous high. And if we go by the Fibonacci extension from the top here at $300 to the bottom at like $3, the 1.236 extension comes in at $955. So anywhere in this range is what I would be looking for as the long-term target for Tilray, based on technicals, and then obviously, strong fundamentals of potentially like legalization of marijuana in the United States. Obviously, this is a Canadian company, and things could change as, we may see like publicly traded American companies dominate the space. But I don't see any reason why like these already established companies like Tilray or, some of the others like Canopy Growth would, maintain market dominance and continue to move up. So that's a little bit of a longer term look at Tilray, potential target to the downside, and if you pick that up at $12 and then it goes to, just its previous all-time high of $300 or even its all-time high close on the weekly of $175, you're basically looking at over a 15x. So that is something. And then going into, potentially like 10 to 15 year long commodity bull market, obviously I am bullish on this one specifically, and I think it has some of the strongest potential in its industry. So, and again, you can look at the daily and kind of get the breakdown, but, we are looking at essentially crossing back. Here we crossed, what was it? Back here we crossed basically to the upside at $5.31 on the daily, the 8 and 21 cross right here. We were able to save it multiple times along the way, and then we got all the way up here, and now here the 8 and 21 are looking like they're getting ready to cross for the first time to the downside. It's possible we have a situation like this where we're able to save it like on the 50 or 55 moving average and then continue to the upside. But assuming that this Elliott wave theory is correct and our Fibonacci targets, retracements, extensions, and moving averages as well, this is our 200 simple moving average, which if that continues to kind of move up there, that's basically basically going to be a perfect touch of the 200 moving average right here at the 0.5 and 618 levels. So that looks very likely. And then also would correspond with the 8 and 21 crossing to the downside. So definitely paying attention to that one. This is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research. Trade responsibly. All right, so let's take a look next at let's take a look at a couple more in the traditional market space. So here we have Tesla next. So taking a look at Tesla here. Essentially have, like we were saying before, potentially topped out this trend back here at $900. I was not sure of it at the time, but when we put in this lower high right here, started to look very likely. At which point in time, Tesla started showing extreme weakness. We got the 8 and 21 cross to the downside on the daily, all the way back here at $823. So even if you got out at $795, we came down to almost 600. We're currently at like 680. So we're already down like 15% from there. But from the top back here, Tesla had dropped already over 30%. It's currently down 25%. So, there's a lot of people that are looking at this as buying opportunities. People were talking about how Queen Kathy bought back here and she put the bottom in for the markets. I don't believe in that. What I do believe in is that this is the first year that she's ever been successful and profitable in her fund, as far as I'm concerned, or at least like notably profitable. If you look at her previous track records, this is basically like her first good year that she's ever had, or first notable year. So it's kind of funny that everyone's like piling into all these ARK investment funds and everything. It's easy for anyone to deploy a ton of capital and, look like a genius in a bull market. Just buying a couple key stocks or a couple key sectors, tech sector, growth, like drug stocks, whatever. Not sure that it's going to be a consistent track record. Talk to me in 20 years and we'll see how she does, over the next 20 years. That's how you figure out who to follow, is who's been successful in markets for long periods of times through not only bull markets but bear markets as well, consolidation phases, etc. And who outperforms the markets. So once again, taking a look at Tesla, essentially what we're looking at is a couple possibilities. Was this our swing down here at $325 up to $900? That is in white. So if we sell off from there, we've already hit the 236. We basically tagged the 382 perfectly, attempted to come back up, could not get above the 8 and 21, got rejected off the 50, 55, found support on the 89. Our next target would be the moving averages to the downside, the 200 exponential or simple. It's going to line up perfectly with the 0.5 at $540 or the 618 at $478 right there. So definitely paying attention to that. Also paying attention to the longer term view. Once again, if you take from the bottom of Tesla down here in 2019 June, when it was $35 to the top at $195, and then we got a basically 61.8% sell-off, found support and then moved up, and then assuming that was our 1, 2, here's our 3, we're coming back down for the 4, potentially like finding support slightly higher than that previous level. Would be our 0.5 here. If we sold off to the 618, that would be our previous top right there. So anywhere in between $265 to $205 is looking like a potential sell-off for this. That would be taking out this previous level that we're swinging from right here, and then swinging instead from the bottom of what's potentially that 2 to 3. So, and then once again, if we did the exact same thing, we can take our Fibonacci extensions from the top of the 1 to the bottom of the 2, and you'll see that we got back up here exactly to the 2.5, fell slightly short of the 2.618 Fibonacci extension. So let's take that back off there. And then take a look at what would potentially be happening for our next wave here. So if we do the same thing and we fib from the bottom right here, top right here rather, to our potential bottom right there, we would be looking at essentially a similar move up to the 2.5 to 2.618 move, which it sounds crazy. Maybe Queen Kathy is right, but we would be looking at basically like a $6,000 to $7,000 Tesla. Again, that is, assuming a long-term bull trend, bull market, after a violent sell-off, after consolidation, and assuming that this is in fact a 5-wave structure that's going to be playing out. But again, based on measured moves and previous price action, it does look very likely at this point in time. So Let's take a look at one more. And it's also noteworthy that basically, like, from when Tesla announced its $1.4 billion investment in Bitcoin, it has done nothing but sold off violently since then. So let's take a look now at MicroStrategy as well. So MicroStrategy, similar situation here. You have a guy who's brand new to Bitcoin, who was basically a trash talker of it in the past. All of a sudden now he's a rocket scientist, and has deployed $1 billion worth of capital into these markets. I believe he purchased Bitcoin on his most recent purchase at $53,000. We're currently at less than $47,000. So was this his largest and also worst Bitcoin buy so far? Potentially. MicroStrategy was basically a dying company with tens of millions of dollars, potentially, I think even hundreds of millions of dollars of losses, not profitable, not doing well, developing nothing. And rather than just buying back its own stock and, propping up its zombie company, you essentially saw Michael Saylor come in and, speculate on a digital asset, which is Bitcoin, which most people who like this channel, follow this channel, also like Bitcoin. There's nothing wrong with that. I obviously do. I'm obviously a long-term investor, holder in Bitcoin. But, I also believe in technicals and fundamentals as well. And inflating one bubble with another bubble is not always a good idea. So you'll see MicroStrategy basically had a parabolic run from like nothingness, $100 up to $1,300, and topped out there. And then from that $1,300 top, it has sold off over 50% already. It's currently down 44% from its all-time high right there. So, it's obviously in a bear market and looks like total trash right now. Just like Michael Saylor, he has basically just created a marketing campaign and propped up his own stock as well as Bitcoin, and probably caused irreparable damage to both of them. If you look into his past as well, people call him Bitcoin Jesus. He's more like Bitcoin Judas. The guy is a scammer, got in trouble with the SEC previously, almost bankrupt his company, had to pay millions of dollars in fines, and, continued to be the CEO of MicroStrategy, at which point in time it basically floundered and almost died, and was completely irrelevant up until recently, when he started speculating on digital assets and all of a sudden showed up in the space. He doesn't like to talk about his previous scammer days, and I'm sure that the SEC is going to be coming for him once again. So be careful investing in anything, with his name on it. Obviously, I don't think that he can destroy the entire Bitcoin space on his own, but I suspect MicroStrategy will probably implode at some point in time, probably in the near future. You'll see the 8 and 21 are getting ready to cross on the daily to the downside, at which point in time I would expect us to come retest that previous high at $633. Also lines up with the 50-55, 89 at 517, or the 200 exponential, or even simple down here, probably closer to the like $360 to $280 range. Definitely not unrealistic to think this thing is going to just continue to dump, potentially die. There's a good possibility that this thing will never come back to its all-time high. It is possible. If it does, it'll probably be way, way, way in the future, as essentially, now there's a Bitcoin ETF. It's Canadian, but there's still an ETF. So there's things like Grayscale or MicroStrategy that are essentially like just fake Bitcoin funds. I think will die in the future because there's no reason for someone to pay a premium for a company that's just buying Bitcoin and that's their only technical or like fundamental reason why they're bullish. So this was basically looked at, in my opinion, as an ETF. Once there's real ETF, which there is now, maybe Canadian, but I'm sure the US ETF is probably on the way eventually, as anytime you can make money off something, the government wants to get its hands on it. So I would expect there to be a, American ETF in the near future, sometime probably this year, if not this year, next year. But I would expect things like Grayscale and MicroStrategy to basically lose their luster. So, and then we can just, I'm going to skip over some of the other traditionals and just go straight into gold. So here we have gold doing exactly what I said. Everybody was extremely bullish on gold, looking at fundamentals, looking at technicals. We came down here to the 200 exponential and simple, broke down from it, found support, got a nice bounce, double top right here, came back to it, got a weak bounce, weak bounce, weak bounce. Now we're under it, couldn't get back above it. Now we just took out, that was our previous low right there. That was our higher low. Then we came down here and basically retested that same low. Here now we broke down from that low. So now on the daily, we've put in a lower low. So, you know, any hope that this was essentially like a bottom out and that we stopped the downtrend, we have a high here, you know, we have a low, we have a lower high, we have a lower low, we have a lower high, we have a lower low, we have a lower high, we now have a lower low. So we are still continuing this downtrend. Next target is going to be that previous high back here. You know, everybody said there's no way we're getting down to the low 1700s. There's no way we'll break 1800. 1730 is our next target to the downside, you know, followed by that 1660 range. You know, it's starting to look like there's potential for us to start coming back down here and testing some of these more violent levels. We are losing the slope on the exponential. It's basically flat right now. The simple is still slightly positive to the upside. But, you know, once again, once you're below the 200 exponential moving average and simple moving average and they lose their slope, you know, that's entering into like a reversal in the trend. So here, once we got above them and, you know, consolidated above them back in January of 2019, we entered a bull market. You know, that was our entire bull market. Now here we're potentially entering a bear market. So that's what I'm paying attention to. We could find support right here and continue to the upside, but you'll see at no point in time in this whole entire trend so far did we come even close to reversing this trend like we are now. So again, it's not time to get overly bullish or bearish. I'm sorry. I wouldn't just start going out and selling your gold. It's not financial advice. I'm not your financial advisor, but you know, we're potentially looking at a breakdown. We've been operating inside of this channel for quite some time. We got that fake out breakout or failed breakout rally here, failed to hit the measure move, came back in, consolidated at the top, broke down from that, put in a series of higher lows, broke down from that, came back up, tried to save it one more time, broke down from that, and now we're breaking down from that key support level. If we just come down now, we're at the heart line of the channel, so we've touched it once, twice, 3, 4, 5 times in a row right there. Each time we've gotten a lower high. So if we come down now to touch basically the bottom of the channel, we're looking at the high 1600s to low 1700s. Looks extremely probable to me right now. So that's what I'm paying attention to. You know, gold is starting to lose its luster for sure, or has basically since it topped out back here in August last year. So no surprises here. Let's look at silver next. All right, so here we got silver. You know, once again, everybody extremely bullish on silver. You know, I'm trying to tell everybody you got to pay attention not only to just what silver is one of those things where nobody pays attention to it for years at a time, and then all of a sudden everybody pays attention to it, and then there's unobtainable, unaffordable. It's going to $1,000. You can't get it. Premiums are through the roof in some cases, like over 50%. You know, we're just in a channel. You know, we found support. It looks more bullish than gold. We still have a positive trend on the daily. We're still above the 200 moving average, but these things are correlated and move together. You know, although gold is more of a store of value and silver is like money or store of value, but it's also a commodity. You know, it's used for quite a bit of things in manufacturing. So it is possible these things do decouple, but typically you'll see silver and gold move in the same direction, but silver would be like a more exponential like moves compared to gold. So let's turn off the moving averages here so we can get a little clearer of a view and turn on our drawing tools. So, you know, like I said previously, we're basically just operating inside this channel. Top of the channel is $30. Bottom of the channel is $22.50. You know, top, bottom, back to the bottom here again, bottom here again, back to the top. You know, so is it unrealistic to think that we're going to break down from here and come back down to the bottom at $22.60? Not at all. You know, we broke out of this resistance line here in purple, got our measure move up, came up to the top of the channel, broke out of this red descending resistance here, failed to get the breakout to, you know, new micro high. Macro high is still $50. You know, if you want to look at my overall targets for silver up in like the $90 to $200 range, look at some of my previous videos. I talk about the cup and handle and everything, but until we start breaking above this 30 with conviction, you know, my next target is 35, then, you know, gets into like the $50 range. But in the meantime, this is looking bearish, more bearish than bullish to me, at least to come back down here and test this level of $24. So right now I'm looking at like micro $26, then $24, then that 2260 range. If gold starts selling off and these things start moving together and we break down from this channel up here, we're looking at like $16.50 silver. Again, you might not be able to get it spot for that price. You might not be able to buy physical for that price, but on the charts, that's what it sure looks like to me. So okay, just flip that back up here, and then all right, so we got gold, we got silver. Yeah, I think we're gonna call it there for today. Hit quite a few assets. Basically, everything is kind of moving together at this point in time. I don't see anything that's telling me that these things are gonna all of a sudden reverse right now. We will see shortly here. We got about an hour and 15 minutes till traditional markets open. But overall, I would expect crypto to potentially get a short-term bounce, possibly even a bullish move over the weekend. But continue to just put in lower highs, and I would expect probably the same thing from traditional markets here. A lot of it's going to be based on what happens with the 10-year, but seeing as how the Fed just had their meeting, and then right afterwards we get this massive bullish move, and the dollar is showing strength here as well. Traditional markets are showing weakness. It's all lining up perfectly for this to potentially play out. So in my opinion, time to be, definitely going into neutral positions, risk off positions, hedging positions, shorting positions, whatever your cup of tea is. This is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly, protect your capital, grow it intelligently. Gambling has worked for quite a few people for quite a while now. But, the best way to get someone to lose all their money is to get them comfortable gambling with it. So if every time we get a dip, you can buy it and it goes back to a new high, it's easy to make money. But when you start taking out low after low after low, is when people start getting wrecked, because they start trying to dollar cost average into what is turning into a downtrend, and you keep buying, eventually run out of money, capitulate based on time or price action, and then finally don't get the opportunity to buy the lows when they do show up. These types of trends that we're potentially looking at are the type of trends where we're looking at potentially like 30-year trends, like bull and bear trends here playing out. So at least multi-year trends playing out. So it's not unrealistic to think that we could be coming down in the long term to retest the lows of some of these like stocks, cryptos, etc. So is the bull market over? Not necessarily. Is it showing some serious warning signs? Yes, it definitely is. Do I still think that there is a commodity bull market at the early stages? Yes, 100%. Even with economic downturns, even with deflation, you can see inflation or hyperinflation of useful assets, food, gas, necessities like commodities, etc. So while we could see like an equity and real estate bear market, recession, depression, it's completely realistic that we could see all that taking place with stagnation or economic deflation while commodities raise. So, essentially like commodities are going up while everything else is going down. Necessities are going up while everything else is going down. So, well, there you have it, guys. Hope you like the new setup. Let me know what you think. I've been messing around with, the volume and just the way I'm going to be doing my technical analysis. Going to be starting to do live streams here shortly, just working out some of the bugs. Hopefully there are none in this stream, and the overall quality is better for everyone. Also, like the sound quality, technical analysis, touching on what everybody wants to see, and we can start to really grow this channel exponentially. So there you have it, guys. Not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. Crypto trend trader, and I'm out of here.